Hello, my name is Lee Blunden. I'm Director at Clements Cummins Accountants in Romford. And then this video is all about getting to grips with selling online. In the last year, there has been a surge in online sellers and marketplaces as businesses attempt to deal with the restrictions placed on everyday life by the pandemic. Within the first 4 months of lockdown, more than 85,000 businesses launched online stores, and joined online marketplaces, according to research. And since then, many more have sprung up as both new entrepreneurs enter the market and established businesses build successful e-commerce offerings. According to Statista, the United Kingdom is now the third largest e-commerce market in the world. However, this surge in online selling is not just a product of the pandemic. And for years, more and more consumers have been shunning the high streets and retail parks in favour of online marketplaces and shops. After all, there is a reason why the likes of Amazon are now the world's largest retailers. This shift has only been accelerated by the events of the last year, which have changed both consumer and business spending behaviour considerably. There are, of course, many benefits to operating an online sales business, not least the lower costs of operating outside of towns and city centres, as well as the ease of scale-up. However, there are a number of things that both new and established businesses need to consider when setting up shop online. Based on our considerable expertise in this area, this presentation will go over some of the important steps and considerations, including setting up an online sales business, bookkeeping and accounting for online sellers, pricing models, VAT on online sales, selling to customers overseas. If you'd like to go into any more detail on any of these points covered, why not arrange a consultation with me? Setting up a new business can be very exciting, but it's not without its challenges. There are certain steps that all new entrepreneurs will need to consider when launching their new enterprise. This might include what business structure to use, setting up a business banking, investing in insurance, or careful tax considerations. We have helped a number of clients set up a new online business, helping new owners to navigate the complexities and opportunities they face when launching their company. We've also helped existing businesses to diversify into the world of e-commerce, either through their current company or by helping to launch subsidiaries. And when launching a new business, entrepreneurs must consider their company structure. This could mean operating as a partnership or sole trader, or, as in most cases, incorporating the business as a limited company. Choosing a limited company structure brings with it many distinct advantages when it comes to tax and personal liability. Entrepreneurs should also be aware that it also has several important obligations and responsibilities. A limited company must be registered with Companies House, and you need to provide details of the registered office and company officers. This includes people of significant control within the business. Companies need only to appoint at least one director as part of their incorporation. If you do not have commercial premises and do not wish to use your home address as a registered office, you could also use our address for a small annual fee. However, this cannot be used as a trading address. If you do not want to immediately establish a limited company, despite the benefits it offers, we can help you deal with the requirements of being a sole trader. Then as your business grows, we can help you to alter your business structure to meet the needs of those of the business. The company is required to have its own bank account. The bank will need a copy of the certificate of incorporation to set up the account. You can also open a savings or reserve account to help reserve funds for your tax bills. When setting up a business, you may also need to ensure it is protected by insurance. Generally, there are 3 types of insurance that you need to consider when setting up a business. These are employer's liability insurance, public liability insurance, and professional indemnity insurance. However, in light of recent events, it may also be worth investing in a comprehensive business interruption insurance policy, which explicitly spells out what payments will be made in the event of a pandemic or similar event. At some point, you may need to recruit employees as your business grows. If you intend to pay a salary to yourself or others, then you will need to set up a PAYE scheme with Revenue and Customs, or HMRC. HMRC will issue a reference number to the company for the scheme. Once this has been set up, you will then need to calculate and deduct the PAYE and national insurance every time you pay your staff. This is payable to HMRC monthly or quarterly. You are also required to notify HMRC each time a payment is made to an employee. This is known as real-time information, or RTI. If you are paying yourself a salary, then you are required to also run this through the PAYE scheme. The right levels must be chosen according to your personal circumstances. In some cases, it may be beneficial to pay yourself a smaller salary and dividends to reduce the amount of income tax you are liable for. You also need to consider the provision of pensions to staff. Under the complex rules of auto-enrolment, all employers have to provide for their qualifying workers by enrolling them into a workplace pension scheme. This includes all staff members aged between 22 and state pension age that earn at least £10,000 per year and work predominantly in the UK. It's strongly recommended that you issue formal contracts of employment to your staff. These should set out the standard terms and conditions of their employment, including the salary and benefits they will receive. Every limited company in the UK is also required to file accounts with the registrar at Companies House. Accounts are usually made up to the business's accounting year-end. The company's year-end is originally set on the month in which the company was incorporated. It's possible to change your company's year-end, but an accounting period must not exceed 18 months. There are also restrictions on extending the year-end more than once every 5 years. The annual accounts must comply with the Companies Act 2006, including the format and notes to the accounts. Smaller businesses can file filleted accounts or micro accounts if certain conditions are met, which means that they do not need to file a profit and loss account on the company record. The accounts must be filed with Companies House within 9 months of the accounting date. There are strict penalties for late submission of accounts enforced by the registrar. Every limited company is also required to file Form CSA1 annually with the registrar. This form confirms the registered office, officers, shareholders of the company, and the persons with significant control. If you use our office as your registered office, we will take care of this for you. Corporation tax is paid by the limited company on its net profits after allowable expenses and capital allowances. The current corporation tax rate in the UK is 19%, but there are a variety of reliefs that a business can take advantage of to reduce their tax bill. Corporation tax is set to rise from 2023 up to 25% for the UK's most profitable companies, with profits of more than £250,000. Although the existing rate will continue to apply for companies with profits of £50,000 or less. All companies between these two thresholds will be taxed at varying rates based on a complex calculation for marginal rate relief. Corporation tax is always calculated based on the accounting period to a maximum of 12 months. If your accounting period is more than 12 months, you'll need 2 tax returns to cover the period. Corporation tax must be paid to HMRC 9 months and 1 day after the accounting period, provided that the accounting period is not more than 12 months in length. If the accounting period is longer than 12 months, the profits will be split and there will be 2 payments due to HMRC. One which will be 9 months and 1 day after the first 12-month period, and the second which will be 9 months and 1 day after the end of the accounting period end date. Once you have registered your limited company with Companies House, HMRC should be notified that your company exists. It will then contact you and ask you to complete a form CT41G, which confirms your company's details. And that will indicate the company's UTR, which is a unique tax reference number. It's a 10-digit number, and the company's allocated HMRC tax office. This will allow you to report and pay corporation tax. As well as figuring out what structure your business should take, owners also need to think about what type of online business they intend to run. There are a number of variations to consider, which I will now outline quickly for you. Business to consumer, or B2C. B2C businesses sell to the end user. B2C model is perhaps the most commonly used business model. The decision-making process for a B2C purchase is much shorter than a business-to-business purchase, especially for items that have a lower value, and the sales process is often far simpler. B2C doesn't only include products, but digital services as well. This is a fast-growing area of online sales. There are a range of ways to conduct B2C sales, like mobile apps, online marketplaces, native advertising, and marketing directly to customers via social media sites. Then we have business to business, or B2B. In a B2B business model, a business sells its products or services to another business. Sometimes the buyer is the end user, but often the buyer resells to the consumer. B2B transactions generally have a longer sales cycle, but higher order value and more recurring purchases. Then we have consumer to business, or C2B. C2B allows individuals to sell goods and services to companies. This could include a website that allows consumers to outline services they need and have the businesses bid for the opportunity. The business model also includes affiliate marketing services, where a company pays a publisher or affiliate to promote a service directly to customers via relevant websites. Often, C2B approach gives consumers the power to name their price or have businesses directly compete to meet their needs. Consumer to consumer, which is C2C. Consumer to consumer businesses include many existing online marketplaces, such as eBay or Gumtree, that connect consumers to exchange goods and services. These types of business typically make their money by charging transaction or listing fees, as well as through advertising on their site. Businesses also need to consider how goods and services will be delivered to their customers. Once again, there are a number of different methods for owners to consider. There's direct to consumer. This form of delivery relies on sellers providing goods and services directly to their clients. It cuts out marketplaces or other websites that act as a middleman to connect sellers with potential consumers. This model could include businesses that have a dedicated sales platform or online shop, or that provide services directly via their website or social media and various features on these solutions. White label. White labeling simply refers to applying a name or brand to a generic product purchased from an existing distributor. Similarly, private labeling is where a retailer hires a manufacturer to create a unique product for them to sell exclusively. These forms of delivery help businesses to keep their initial investment small, as they do not need to factor in the cost of design or manufacture, as they are essentially outsourced to another party. Often products sold this way are sold under a license, or sometimes even a franchise, which may incur additional fees. With wholesaling. In a wholesale approach, the retailer offers its product in bulk at a discount. Wholesaling is traditionally a B2B practice, but many retailers have offered it to budget-conscious consumers in a B2C context. There's dropshipping. This is one of the fast-growing forms of e-commerce, especially for new starters. Dropshipping market and sell items fulfilled by a third-party supplier, such as AliExpress, Dover, Printful, and many others. The role of the dropshipper is to act as a middleman by connecting buyers to manufacturers, often through well-known online marketplaces like eBay or Amazon. Easy-to-use tools allow sellers to integrate inventory from suppliers around the world for their various storefronts. By buying goods at wholesale prices and selling them at retail, businesses are able to make profit by fulfilling orders for customers. As goods are often sent directly from suppliers to fulfillment warehouses, it means that owners do not have to lease or buy expensive premises and can operate with minimal overhead. Then we have the subscription service. Subscription services are nothing new. In fact, since the 1600s, subscription businesses have existed in England, allowing consumers to buy goods without ever setting foot in a store. With e-commerce, businesses are going beyond periodicals and wine of the month clubs to today. Virtually every industry has seen the arrival of a subscription service to bring convenience and savings to customers. Of course, an important part of operating a business online is getting paid. While the shop can easily take cash or card payments via their till systems, online businesses need to have methods for getting paid. There are many well-known options out there, like PayPal, and more traditional methods like the Visa and MasterCard services that, for a small fee, handle transactions between the customer and a business. Many online marketplaces also offer their own payment methods for consumers to use, or have the payment methods above integrate into them. There's also been a recent development in buy now, pay later service, such as Klarna, which effectively offers short-term credit arrangement, usually 3 or 4 months, that allow shoppers to spread the cost of purchases. If you're setting up a business online, evidence shows that offering flexible payment methods can have a positive effect on the number of sales you achieve. Consumers like to have the choice of payment methods to suit their needs, so this is an area that is worth researching further. Importantly, many of these payment methods now integrate with online accounting software, which means that your accounts will be updated in real time without the need for manual data entry, saving you time and money. If you're dealing with B2B sales, in order to receive money from your customers, you may need to provide them with an invoice. Legally, an invoice must contain the following details: full company name and registered office address, invoice date, a description of the goods or services, and the total amount paid. It's also good practice to include the company's registered number, a trading address, if different from the registered office address, invoice number, which should be sequential if possible, the name and address of the customer. There is then further information to include if you are VAT registered. There are a variety of digital applications that can assist you with this process, which integrate with cloud accounting platforms. You are expected to maintain appropriate accounting records for your company. Whilst there is no set requirement as to how you maintain the records, HMRC requests that records are adequate for the size and complexity of the business. As a minimum, you ought to maintain copies of sales invoices sent to your customers, purchase invoices for any supplier costs you incur, expense claim forms for items reclaimed from the business by any directors or employees, which includes details of journeys for any mileage claims, petty cash expense receipts, bank account statements for the company, statements for any company credit cards, copies of any loan, finance, hire purchase, credit accounts the company has with any third parties. As the e-commerce industry has grown, so has the demand for effective bookkeeping and accounting solutions that integrate into the native platforms that many sellers use to meet these bookkeeping requirements. This has led to many innovations to not only help keep sellers compliant, but to ensure that they have the real-time information they need to make key decisions. Taking advantage of accounting software like QuickBooks and Xero's dedicated online e-commerce solutions is certainly one way that many new businesses are achieving this. Cloud-based options in particular can really help you get a handle on your finances and allow you to fully digitise your bookkeeping practices, so you won't have to keep physical receipts, invoices or sales records. These platforms offer easy integration. These platforms and connected third-party apps allow you to easily integrate your existing inventory systems and sales records to provide real-time, precise financial reports, real-time collaboration. Just like you can sell to anyone in the world, these solutions allow sellers to work in real time with their accountant, wherever they are located and at any time. Automatic updates delivered via cloud-based solutions means that you can have instant access to the information you require, which will be continually updated without any input from you or your accountant, thanks to the automation that they offer. For many businesses, whether you're a limited company or a sole trader, you'll have certain tax requirements. That is why it is key to have an experienced accountant that can handle your weekly, monthly and yearly bookkeeping, as well as your end-of-year tax report. However, beyond keeping your company compliant, truly skilled and proactive accountants can do so much more for your business. By working closely with an accountant, they can help to spot potential issues or opportunities on the horizon and offer advice that can reduce a potential tax bill further down the line. It's important that you choose an accountant that has experience with online sales and e-commerce and is well versed in the terms and difficulties that sellers face. A lot of business owners really struggle with pricing. It's not usual for them to price just a little lower than the competition or by plucking a figure out of midair. Needless to say, neither of these approaches is effective in the digital age, where consumers can review prices instantly. By failing to grasp the importance of pricing when taking sales online, a business may unwittingly make their products or services less attractive. To help businesses with their pricing strategies, we will look at some of the established techniques that they can follow. Psychological pricing, possibly one of the most commonly used forms of pricing. This dates back as late as the 1800s, but remains effective even to this day. Psychological pricing refers to the strategic pricing of goods and services just below a nice round number. We will all have seen this. Maybe a car dealership offers its latest model at $9,999, and how many items are priced ending 99. Many businesses use this trick, and we're all aware of it. Is it still effective? Amazingly, the simple answer is yes. Even though the price difference is negligible, irrational customers don't round up the pence and perceive the item to be cheaper than it is and are more inclined to buy. The importance of 9. Unbelievably, most people see a price ending in the number 9 as better value and more cost effective. This simple strategy may seem ridiculous, but it's been proven to work time and time again. Then we have relative pricing, aka the race to the bottom. Especially in the online world, ensuring your price is relative, i.e. competitive, to the rest of the market can be key, especially with the emergence of price comparison sites. Knowing how much to charge relates to several factors, one of which has to be how much a competitor is charging. However, this shouldn't be the be-all and end-all. Constantly trying to charge less than a competitor will squeeze margins to potentially unsustainable levels and may lead to some consumers to think of your product as inferior. It is at this point where you may want to reconsider how your product or service is marketed. You may decide you want to be a premium brand, such as Aston Martin, or an economy brand, such as Ryanair. Your marketing efforts should then reflect that business decision. It's all contextual. Sometimes a price is justified by lots of different factors, not just the service or product on offer. People will happily pay thousands for a Rolex that tells the time when a £5 watch will do the same. The products fulfill the same role, but there are other forces at play that determine the price. There's snob value, keeping up with the Joneses, for example. The same applies online, and sometimes it can be down to things beyond the price. Even the look of a website or the service offered alongside products can make a difference in how much is charged. A business should therefore look at non-product service changes it can make that will justify a higher price. Be different. When choosing a service or selecting the product, customers will rely on their own opinions of a product, which are entirely subjective. But they also rely on price, which is objective. Prices for similar or identical products can be easily compared and may be a determining factor. Where prices are identical, this can complicate the purchasing decision of customers, forcing them to rely on a subjective decision, which may mean that they do not decide to purchase anything at all. In sales, this is referred to as an analysis paralysis and means both businesses lose out. By purposely pricing differently to a competitor, you give customers a simple choice if they like or require the same services or product equally. This can help to ensure a sale, although it may not always fall in your favour. Offering choice. Research shows that by selling 3 products alongside each other, you subconsciously push customers towards the middle product. Therefore, if you strategically make the mid-price product more expensive, you can increase your average order value. The savvier online seller can also then use this technique to develop a mid-priced offering that is more cost-effective and therefore more profitable. I fall for this myself when researching triathlon bikes. They're always a ridiculously expensive top-of-the-range version that I dismiss before setting on one of their mid-range offerings. I'm definitely not mentioning any prices in case my wife is listening. Many fulfillment businesses such as Amazon now offer pricing software that can give an indication of current prices on the marketplace, the number of items sold recently, and historic trends. These are designed to help sellers establish the potential profit in an item and indicate pricing. These solutions contain a number of innovations, including barcode scanning, which makes the sales process simpler and more effective. In many cases, goods can be scanned and added to a shop, with sellers just requiring to send goods to a fulfillment centre to be stored and shipped as items are purchased. While these apps and software are useful, it's also important to take into consideration the points outlined above. If you are struggling to price an item, it may also pay to seek outside advice from a professional advisor, such as your accountant. For most goods, there is no difference between online, e-commerce, and physically retailing in terms of VAT. The exception to this is digital goods and services, such as e-books and music downloads, which are covered by a separate set of VAT rules. As far as HMRC is concerned, if you're selling goods online, then you're using the internet purely as a tool for communication and distribution, and for receiving payment from your customers. It's the same as if you are handing over an item to customers and accepting their money in a physical shop. And whether you're selling online or from physical premises, the basic rule applies. You can only charge VAT if your business is registered for VAT. You'll need to register for VAT if your annual turnover of your company exceeds the VAT registration threshold of £85,000 per year. However, there can be benefits for businesses in registering if your turnover is below this level, depending on the amount of VAT expenditure in your business. To register, you must submit a form to HMRC confirming the business details. Once you're registered, you are required to charge VAT on your sales at an appropriate rate, which is known as output VAT. The VAT you incur on your costs is known as input VAT. Each VAT period, you must account for the output VAT you have charged to your customers and deduct the input VAT incurred on your costs from this. You must then pay the net balance to HMRC and file your VAT return with them each quarter electronically and pay any VAT liabilities via direct debit or bank transfer. As of April 2019, VAT registered businesses with a turnover of £85,000 or more must make VAT returns every quarter using a designated software package, which includes many of the cloud accounting solutions we use. This is the first stage in the implementation of the government's Making Tax Digital, or MTD programme, which is intended to take the filing of most taxes online. This scheme is being extended into 2022 to incorporate other forms of taxation, including income tax. In the UK, there are 3 basic VAT rates. 20%, this is the VAT rate on most items. 5%, some energy-related goods and welfare and health-related goods, such as mobility aids, have a reduced rate. And 0%, some goods, such as children's clothes, are 0 rated, while some suppliers are exempt from VAT altogether. You can check the HMRC VAT rates on different goods and services page for more details. VAT applies on delivery charges at the same rate as the VAT on the item. So you charge 20% VAT on delivery for goods that are 20% rated and 0% for goods that are 0 rated. If you offer free delivery, then obviously there is no extra VAT to charge, as it's all included in the price of the item. If you are VAT registered, you need to make this clear to your customers on your e-retail site. The prices you display can be shown as VAT inclusive. You do not need to list the VAT separately. One of the key advantages of selling online is that you are not restricted to a specific geographic area. Online shops can sell goods or services around the world, but in doing so, this introduces new VAT and customs requirements that businesses will need to fulfil, including new changes following the UK's departure from the EU. The importance of EORI. Businesses must have an EORI number to move goods between Great Britain and other countries. It's a mandatory part of a customs declaration and is necessary to report and pay VAT as well. Businesses may also require one EORO number, or they may have multiple numbers, depending on the nature of their business and how they trade with the EU. In Great Britain, businesses need a GB EORI number to move goods between Great Britain and the EU. If the business uses a post or parcel company, they may tell the business if it needs an EORI number, but it's best to check. If you already have an EORI number and it does not start with GB, you will need to apply for a new one. Businesses offering services to customers in the EU and not goods do not need an EORI number. It only affects the physical movement of goods over the border. If a business makes declarations or gets customs declarations in an EU country, it will need to get an EU EORI from the customs authority in the EU country where it's submitted. If a business moves goods into Northern Ireland or via it into the EU, they should sign up for the government's trader support service and acquire a XI EORI number. Whether you are just starting out or are looking to grow and diversify your sales online, it's important to have a trusted advisor that not only understands the necessary tax and accounting rules, but also appreciates the unique trading conditions for online sellers. We work with a wide range of online sales businesses, including startups through to large-scale fulfillment companies, delivering advice that adds value to their operations. By managing much of the day-to-day compliance work, we can free up entrepreneurs' time to focus on growing their business, while helping them keep an eye out for opportunities on the horizon. If you'd like to know more about our services for online sellers, why not arrange a consultation with our team?